Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 17th, 2016. Happy St. Patrick's Day. I'm Frank Ochoa, aka PivotBoss, with analysis for the upcoming session. Here's a look at the ES here in the daily time frame. We've been talking about 2000 as being the key level right now. Prices have attempted to hold above that key level throughout most of the week here, and if there's a failure to do so, all of the bulls that came up here to defend will likely get their stops run back toward the previous month's high. So right now, 2000 is a big time level, and that weekly pivot range very important. Bulls continue to be in control short term, but what we've seen here is highs rejected in pre-market trading, and right now retesting the Fed level after yesterday's FOMC statement. So if you take a look at the intraday time frame here, one thing we see right about here is where the Fed announcement came out. That level at the time was 2001 half. That's our new Fed key level. Price rallied off that level, rallied into the 100% expansion target from the key range that we marked yesterday in the trading room, hit that target in pre-market trading, overnight trading today, and then has jumped all the way back to within a few ticks of that level here. So we've seen a lot of upside push off that level yesterday, and then we've seen it come almost all the way back into value at 2006.75. So value 5-day VPOC, very important. Bulls want to defend that for continuation higher, but failure to hold above VPOC opens up a move back toward 97 quarter to 1998.75 at the bottom of value. Overall, prices are attempting to push through to new highs, but that is failing to happen at this time after the recent rejection. So we got to see how price plays out at 5-day VPOC. Right now, that's been bid, and a failure to keep it bid will rotate this thing back toward recent lows here, 97.5. We take a look at crude oil. Crude oil also pushed to new highs here after rejecting off the $36 level. That was our implication here, was that if price comes into the CLVN, look for bulls to defend it for a shot at new highs, and we easily saw that with a solid rejection off this zone almost to the penny, rallied to new highs into the primary weekly bull target 39.31, and is now seeing initial rejection of prices above those highs. If price cannot stay above 39s, the implication would be a return back to 36s for another retest of that key support level. So if we look at the intraday time frame, you can see how solid that rejection was off of 36s. That's exactly what we were looking for. And that so far, with precision, has led to a solid 3.5 point rally into 39.64. So it's been a solid move up. Now we have the key level here, 38.39. We've seen rejection here above the previous week's high. Right now, any failure to hold above 38.39 would auction this thing right back down toward where the rally began. So this is going to be very important to see how this plays out. I would say that bulls want to defend a pullback right now, perhaps into value, perhaps lower into 37.97, which is an HVN from the higher time frame. Bulls want to defend somewhere in here for a push higher. Any failure to hold above that zone auctions this thing right back toward 37. So the intraday time frame of gold shows how impressive the rally was the previous session here. This was big. Obviously, we talked about this narrow coiled range, very tightly coiled price action. Once the Fed hit, which was right here, 1230.8, the Fed came out at that point, and you've seen a significant rally ever since. Price has never come back to this level yet. We've gotten a push into 1272s. We know that prices above there have been significantly rejected. 1263.90 is the top of the key range. Right now, price is attempting to hold above that level. Failure to hold above this level auctions price back toward 1251 with a shot at retesting value down below at 1232.60. So this is going to be important. Bulls want to keep this area bid right now, especially on this retest right now, for a shot at pushing through 1272 and perhaps into the next upside key levels. Right now, the key levels for the day, 1276 and 1282.90 would be the next upside levels. Failure to hold above 63.90s opens up a return to 51s, and on the downside right now, a primary bear target would also coincide with that 51. So if there's a failure to hold this level, you get a high probability opportunity to reach 51s. Defending this level squeezes it to 76 with a shot at 82s. Let's take a look now at the NQ here. The NQ has been very sloppy here recently. We had a significant rejection all the way back up. We bounced off the midpoint of the range to the top, but once we get to the top here, it's gotten very sloppy, and then eventually kind of shifting up. We have finally hit the 25% expansion target right there from the key range, 4,300. That's the 25% expansion target, hit it, and is now bouncing back down. Typically speaking, a rejection off this level opens up a return back to the top of the key range, 4,300. That could be an area where bulls want to redefend for a continued squeeze higher. Failure to hold that level opens up a move back toward 4,200. So that's kind of where we're looking at right now. If we look at the intraday time frame, you can see right here, big time rejection above the previous session's highs. Price went offered through the previous close and is now dropping. Typically speaking, that pattern of events usually leads to a test back at the previous session's low. So we could be looking at a follow through into 43.46 half. So a pullback into the previous close here could offer a selling opportunity for a push down into this zone. If price does push into this area, maybe coming down into 43.30 could offer an opportunity for bulls to come back in, defend the bottom of value, and return back to value and perhaps higher. So we'll see how this continues to play out, but overall we're seeing early rejections of prices above the previous session's high. Here's the key level, 43.55 half. That's the FOMC level. Price rallied off that level and has come almost back toward that zone right now. So the implication would be bulls want to defend this zone for a shot higher. Failure to do so could run the stops way against it back toward 4,300. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.